Yes, I can hear you, Kiran.
Sweet. Hey, Yash, how are you?
Hello.
Cool. Awesome. Awesome. Okay. So let me do a very quick intro and we'll get started. So thanks everyone. I know it's a Saturday evening and it seems like weather is nice out there. So thanks for taking your time and joining and this exclusive Tokenomics workshop. This first of its kind. Anyone is doing an exclusive workshop on tokenomics in India, and I'm very pleased to have Ash with me, who will be co-hosting and will be taking the session exclusively on gaming tokenomics. So I'll be focusing on the DeFi part. So a couple of logistics, feel free to put your questions in the chat box down below. If you have any specific questions, what we will do is, we'll give you a chance to unmute yourself and ask questions at the end of the session, or like raise your hand. I'm happy to, we are more than happy to take the questions around the session as well, because this is more of a learning and the discussion rather than me teaching you some stuff there. And what else? Yeah, we'll be sharing information via a PPT. Don't sweat. We will share the PPT soon after the session along with the recording. So just try to grab as much information as possible. Ask as many questions. So our goal is to get to as many questions as possible. So to set the context before going into the intro, so this tokenomics workshop is a very basic workshop that we are attempting to do. In this session, we'll be talking about what tokenomics is all about, what a token is all about, and from how do you read the demand and supply of a particular token, and how do you understand whether a particular token has an inflationary or deflationary aspect. And then we will deep dive into tokenomics of a specific DeFi project. In this, for this workshop, we picked up Curve Finance, which is the DeFi platform, to talk about the tokenomics and how their tokenomics is designed in a good manner. And Ash will be talking about gaming, our all-time favorite, Axie Infinity tokenomics, how Axie Infinity has designed their tokenomics, and what went wrong, what went right there, and all that stuff. So primarily, we have designed this workshop for you if you are looking to invest in a particular crypto token, how to read the economics of a particular token or a project. Okay? And then from the founder perspective also, it is also very important to understand how the demand and supply works in your crypto project, and how to design a particular token. This workshop is not related to token engineering per se. So designing a token requires a deeper understanding of computer science, calculus, data science, and various other aspects. So we are not getting into that aspect of, okay, what analysis do you need to run? What CAD functions that you need to run to design a particular token. This is going to be very basic stuff. As we progress, I think you will fall in love. Hopefully, you will do the justice in making you fall with that. On that note, I will let Yash introduce himself, and then I'll go next, and we'll get into the session. Yash, over to you.
Sure. Hi everyone. So my name is Yash. I'm just helping out Kiran here with tokenomics because it's a very near and dear topic to my heart. I really love researching about tokenomics and talking about it to people, and I hope this turns out to be a great conversation between all of us. So a little bit about myself. I have a master's in financial engineering, and I've worked as a financial risk analyst at BlackRock, which is the world's largest asset manager. Since then, I have gone down the Web3 rabbit hole, quit my job. Now, currently, I'm the co-founder of a portfolio management startup for crypto. So that's what I do most of my time. But I also like to, I met Kiran online, and I really liked what he was doing. So I offered my help in any way that I could. So yeah, I have, educationally and experience-wise, I have a lot of lot of interest in economics, and just learning that within the Web3 space has been really interesting. And applying that to this space is like something that really ticks my brain. Yeah, that's about me.
Cool, super sweet. Yes, thank you. So, guys, I'm sure most of you know me, but if not, like my name is Kiran. I'm the co-founder of Web3 Learn. Web3 Learn is a blockchain skilling platform. We're heavily focused on training developers at the moment, but at the same time, we are also venturing into the non-tech areas. So today's attempt is one of that to demystify the non-tech components of Web3 and blockchain and help people transition into the space. Before starting Web3 Learn, I spent decent amount of years in New York working with private equity. And I started Soho Ventures, which is a family office network, where I closely work with family offices across the globe in providing thought leadership and alternative asset class deal flow. Happy to chat a lot, about that more in an offline mode. But yeah, let's get started on that note. Let me share my screen. Can you guys see the screen? Just to confirm.
Yes.
Cool. And what we will do is, rather than making this more of a boring lecture session, we'll try to make this more of a discussion. And we need your participation in that. So that means more and more questions, interject us at any point of time. So on that note, let's get started. So we gave, intros done. As I said, the content part, we will be discussing about what is a token. These are the basic high-level concepts that we will be touching upon about tokenomics today. And on that note, let's deep dive. So Yash, you want to just take a cut or about what tokenomics is all about?
Sure. Yeah. So as I was saying, tokenomics is kind of just it's a marriage of like tokens and economics. So the really great thing about Web3 is the flow of value over internet. So like Web1 and Web2 had flow of information over internet, but now with tokens we've come up with the flow of value through tokens that we can interact with each other with tokens. So this is just the economics of how these tokens work and how the supply and demand of these tokens eventually create like a really nice environment within Web3 that it aligns incentives. So another big thing about Web3 is that we want everyone to be incentivized in the same direction. So a good combination of tokenomics can help all the parties, all the stakeholders towards a common goal, towards a common incentive, and align it so we can work and be more productive.
Cool. Thanks, Ash, for that intro. So guys, let me kind of little bit demystify, right? So I always take this example whenever we talk in the Web3 world, right? So the Web3 world did not come out of blue. So what we are doing is we are actually drawing parallels from the Web2 world and creating an alternative, ecosystem, identifying the loopholes and the drawbacks in the Web2 world into the Web3 world. Okay, so the way how I think about tokenomics and how I even explain to tokenomics for anyone is, think about each crypto project as an economy. Okay, so and let's take a step back and then let me take you to the Web2 world, right? So now each country is considered as an economy, or like and in a greater economy, and then within that economy you have like subsets of different economies there, right? Whether it is manufacturing, services, IT, you can define any number of economies, within the greater economy of a country per se. So primarily, how does an economy run, right? The economy runs. So forget about Web3 for a moment, right? Forget about tokenomics, for a moment completely. So how does a country run? What is the underlying pinning factor for a country to run? I'd like to throw open the, any random guesses. not random buses. I know you guys know. How does a country run?
I would like to say with mutual coordination.
Yeah, mutual coordination, but on the top of it, yes, someone mentioned offering product and services. Yes, we are on the right track. So for offering products and services, what is it that we are bringing into the economy? We are bringing in assets, right? Dollar. Perfect, Krishna. There you go. Right, dollars. Similarly, with regards to say for the if you talk about the Indian context, money, right? Money as a circulation. So the money as a circulation is, from the economy perspective, is see, Web2 is a centralized economy, right? So in a centralized economy, who controls the money supply? In the case of India, it is Reserve Bank of India. In the case of US, it's a Federal Reserve Bank. And then that money percolates to the banks, and then eventually gets into the economic circulation. And in the economic circulation, we as retail investors or the users, we use that money for the products and services. Okay. So just try to understand that, right? So now there is a money component, which is the liquidity component that is being issued, by the Federal Reserve banks, and then that money is being percolated, down, through various channels, and we have a utility, at the end of the day, that we are creating by using that currency, right? So there is a utility value that we are actually creating, right? So if there is no utility, would you take your 200 rupees or 1,000 rupees note and would you pay for that, whether it is a product or service? No, right? So you are actually, encouraging, I mean, you're recognizing that there is a utility in a product or service and you're paying for that service, okay? So that is what, happens in the, economy. Of course, we try to make it, simpler, but, there are like a lot of different components that goes into designing an economic system. Okay? Now, I want you now to draw parallels of the present Web2 world, the country, the three components that we discussed, to the Web3 world. Okay. In the Web3 world, in generally consider each crypto project or a Web3 project as a mini economy. Okay. So when you consider each crypto project as a mini economy or mini ecosystem, so now draw the parallels to the Web2 and the Web3. What are the three components that we need to have? So the first thing is we need to create liquidity, right? And then we need to create, demand and supply for that particular liquidity, right? You're actually creating that in the Web2 world as well. And then the third component is you need to create utility value for that particular, liquidity or the currency, so rather than liquidity, let's use the word currency, right? So three steps. One, you need to create a currency, and the second thing is you need to create a demand and supply of that currency. And the third thing is you need to create a utility value of a currency. Okay. Now let's slowly go into the jargon and of the Web3, right? We are talking about liquidity and currency in the Web2 world. Here in the Web3 world, we are terming that name as token for a moment, right? We are trying to demystify and simplify things here. Okay, don't go too much into the definitions at the moment. So the liquidity and currency, analogous and similar to the Web3 world is a token. Okay. So that's why the whole concept of tokenomics has come into picture, right? So it's a token, and the economy surrounding that is nothing but the tokenomics, So does it make sense, guys? Let's stop here and if you have any questions. We'll keep pausing in, once in a while. Okay, so we want interaction. Does it make sense? Like to draw parallels. Were you able to understand? Cool.
Just one thing to add, Kiran. I think you were spot on. So I think just like you said, every government and every economy, like globally, every country is an economy in itself, and technically those federal governments are also playing their own tokenomics. It's that their token is their local currency. So let's say for the US it's the dollar, for us it's the INR, but they're also creating their own tokenomics by controlling supply, by printing more money. Last year when we required it, and then now reducing supply by this quantitative tightening that the US federal government is doing. Um, the only advantage that these governments have is that in terms of extreme pressure, they can actually take harsh measures in limiting the access of these currencies. So let's say, for example, with how the U.S. cut off Russia from all its dollar reserves, that is kind of like an easier way out for the U.S. government because they always have the kill switch, which is what happens in a centralized economy. That sometime everywhere someone has a kill switch that they can enable. This has already happened in the past during when like the 1930s when the US government banned or like there was a ban on holding gold. Individuals, retail people could not hold gold because it was against the interests of the US government. They wanted the people to own dollars and to own UST bills. So they basically banned it. So I'm just like the central authorities is always an easier way out because they can always enforce some harsh methods, some draconian methods. But when it comes to Web3, we are trying to implement this art of tokenomics in a more it's a more systematic and mathematical way, uh, along with a behavioral pattern where there is technically no kill switch. So I think it takes more effort and it's more art. It's a much complex combination of art and science. Yeah.
Absolutely, yes, spot on. I think you actually set the ground for us for our next topic. What is a demand and supply of a token, and what happens if there is an excessive demand and if there is an excessive more demand, sorry, more supply and less supply there, right? So absolutely, spot on. So we have like two questions. Guys who joined new, the PPT and the recording will be shared. Don't sweat. Just listen to us and then ask as many questions. That's the agenda. And Rishabh, let's go through the all the slides and the discussion. We'll share more and more information. Don't worry about that. Okay. Voice seems to be a little unclear. Is it mine or? Yes. Try to fix that. Cool. So we set the ground about what tokenomics is all about, right? So it's a crypto economy, and then you are actually creating a token for each and every project. So this is just like higher level note. Obviously, everyone knows this. So projects with always the best tokenomics, will win in the crypto market, in the Web3 market. Bad tokenomics, will always lose. We'll come to that in a bit. Don't worry too much. So understanding tokenomics. So if you are a crypto investor, if you are looking to invest in a particular project, or if you want to also read and understand whether you want to work for a particular project or not, rather than understanding, of course, understanding what the project is all about and what it does, is very, very important. But at the same time, understanding the tokenomics of that particular project is very, very, important, right? So how to understand, how to read, let's deep dive in. Okay. So it all actually comes down to supply and demand, as what I said before. If you're talking about a particular token in a project, at the end of the day, it all actually comes to supply and demand. Okay. Now let's actually draw parallels to the Web2 world for a moment, and let's understand what is exactly going on in the market at the moment, so that we can actually draw similars on a parallel scene. Okay, so what happened in 2020? When the COVID hit, all of a sudden governments across the world panicked and they started pumping in humongous amounts of liquidity into the ecosystem. So US pumped close to $1 trillion, and then India pumped like a decent amount of money, decent amount of billions of dollars into the ecosystem. And what exactly has happened there? Because of the excessive liquidity in the market, the money has become very cheap, right? So when you have excess liquidity, when the money becomes very, cheap there, the value of the money falls, it will result in inflation, as simple as that. So we are not going into the, definition of what inflation and deflation is all about. Simply, okay, or might be, let me take a quick example here. So imagine there are like, two of us, here in the room, who are looking to purchase, a kg of tomato. Okay, so the kg of tomato, is the demand. Okay, sorry, the kg of the tomato is actually, the supply there. Okay, which is fixed for the moment. Let's say. Okay, and now with the excessive liquidity, that means with the pumping of the money there. So one of us has got like around, say 1,000 rupees in the pocket. The other one has, 100 rupees in the pocket. Okay, but whereas on the other side, there is only 1 kg of tomato. Okay, and the 1 kg of the tomato has to be, purchased by these two persons, one who has 1,000 rupees and another one who has 100 rupees. Okay, so obviously the person who is actually selling the tomato, the seller, what is going to happen there? So the seller obviously would expect a higher price, and they would say, okay, instead of selling it for 50 rupees a kg, let me sell it for 200 rupees a kg, because I have another person who has, deep pockets of 1,000 rupees and who is ready to purchase my kg of tomatoes for 200 rupees. Okay, whereas the other person is getting lost. Okay, the other person only has 100 rupees and he doesn't, he or she, cannot afford, to purchase that, tomato for, 200 rupees there. Okay, so when you are creating excessive liquidity in the market, when you are giving, this other person, additional money, and when, the demand is, fixed, sorry, when the supply is fixed there, you are actually creating an inflation. Inflation is nothing but you are increasing the price of the value there. So instead of tomato that has to be sold for 50, it is getting sold for 200. Okay. So draw the parallels to, what has happened in 2020, 2021, right? There is so much of money that is floating in the ecosystem, and there is only a fixed amount of supply, right? So people started, chasing that, which resulted in inflation. So where is US inflation at this point of time? It's at 9%, 9.2%, which is at an all-time high, in the 40-45 years. Similarly, inflation in India is at an, again, all-time high, right? So now, how do you control that inflation? You need to take down the, liquidity, from the ecosystem. Thanks to reserve banks and Federal Reserve banks, they can roll out that liquidity and they can actually pull out that liquidity out of the ecosystem. Okay. So I hope that you guys are not getting confused with this economic terms. It's a simple thing, when there is, more amount of liquidity, it will result in inflation. When there is lesser amount of liquidity, it will result in deflation. Okay. So let's actually talk about what is supply and demand of a particular token, in the crypto world and in the Web3 world. Okay. So yeah, I spoke about, the inflation value, inflation and deflation, at this point of time. Let's actually talk about an interesting use case, with regards to, the supply of tokens. Or let me actually stop here. Yes, any thoughts to add?
Yeah, definitely. Just I think 2 slides earlier we were talking about the importance of tokenomics. I just want to go back to that. So just as an investor, so since I've been working on my startup for portfolio management, there's a lot of factors that we consider while investing in a token. One of the key important ones is tokenomics. So which I definitely agree with you that even everyone listening here, even if you just want to invest in a token, I think understanding what the supply and demand of the token is very important. We'll be moving on and finding out that usually it is easier to control the supply, but creating the demand is the more difficult part. But that's to come ahead. But I think like it's really important for even everyone here. If you're just an investor, you can easily find out what's a shitcoin and what's not.
just by basically looking at their tokenomics. Like something I think later down in the presentation we'll be looking at Doge, and we'll just see how its supply is basically unlimited. But yeah, like just wanted to add that. And about inflation, I think you already covered, last year in 2020 and 2021, the US has printed, I think, what is it, 21% of all outstanding dollars that was ever printed was printed last year. So, there's been a lot of inflation in terms of just new monies coming into supply. And now we are in that phase where the federal government is trying to deflate it and trying to reduce the supply so that eventually things are not as expensive as they are right now.
Cool. Yeah. So, guys, let's get into the supply and demand part. With regards to crypto token. One simple concept is a token will obviously increase. In the value. There are only few of those tokens exist. The reason is, going back to the supply and demand. Okay, there is only few supply, and if there is a greater demand, so the token will have more value, right? So. And similarly, on the other note, a token will have a decrease in the value if the supply keeps increasing. Okay. So how do we understand what is the supply of a particular token and how does the supply keep increasing, decreasing, on multiple nodes? Let's introduce some sort of different concepts, especially with regards to the crypto economics, right? Before getting into that, as Ash mentioned, let's take 2 to 3 examples to understand how the inflation and deflation works for 3 of the most important coins that you all know. So one is Bitcoin, right? So let me pause. A quick question to you guys. How many total Bitcoins are there?
21 million.
Yes, sweet, perfect, awesome. How many have been minted so far?
I have no idea. I think maybe 3 million or remaining. I think so. I am wrong.
Yeah.
I think.
No, you're right. Okay, so okay, guys. So the first thing is, the Bitcoin has a total supply of 21 million. Okay. So whether it is us trading in our generation, or kids trading, or grandkids trading, or grandkids trading on Bitcoin, ever, might be after a couple of centuries, the total number of supply of Bitcoins that will be available in the market is only 21 million. There is not going to be even one more Bitcoin that is going to be minted or mined at a later stage. Even if we are talking about 2200 or 2300, I don't know if we do. I mean, might be karma and reincarnation or whatever. But so the total supply of Bitcoin is going to be 21 million forever. Okay. And as of today, 19 million Bitcoin has been minted. Okay. So 19 million of the supply of the Bitcoin is in circulation at this point of time. Okay. And then what they are saying about the Bitcoin is, I think this is the best. 19 million, has been minted, so far. And the last Bitcoin, will be minted in the year 2140. Okay, not 2040, it's in 2140. Okay, so something like 100 years, almost close to 120 years, from now. Okay, and then what they are also saying is the mining of the Bitcoin, the Bitcoin will halve, in every 4 years. Okay. So now let's understand this, from the demand and supply perspective, from the crypto project person, right? Now, what did we say? There is a fixed supply, and then, the majority of the supply is already in circulation, 19 million. And the rest of the circulation is not going to come in next 1 week or 1 month or 1 year. Okay, it is going to come at a staggered stage over a period of almost a century, right? So ideally, what is happening in the Bitcoin is Bitcoin, will have almost zero. It's not having almost zero, like it has zero scope of having an inflation. Okay, so you guys got the concept, right? So it's a fixed supply. Most of the supply is already there in circulation. Rest of the supply is going to happen at very staggered stages. So there is no scope for inflation. Okay. Let's talk about Ethereum at the moment, right? The supply, circulating supply. We are introducing again new concept. We'll talk about that in a bit. The circulating supply of Ethereum is around close to 118 billion. Okay, so there are around close to 118 billion Ethereums that are available in the market. Okay, so as of today, Ethereum hasn't put a cap that how many Ethereum should exist in the ecosystem. Okay, but now I think Ethereum Foundation is doing a work in the backend that hey, we need to cap the supply of Ethereum anywhere between 100 to 120 million. Okay. So going back to our Bitcoin example there, right? So if the Ethereum is capping that, hey, our supply has to be somewhere around 110 million, they can actually take out 8 million out of the transaction through burning mechanisms and all. So there are certain set of mechanisms that are already out there in the crypto space. We're not getting there. So again, go back and draw parallels, right? So there will be hopefully fixed supply of Ethereum, and most of the supply of Ethereum already is in circulation. Even if there is a new Ethereum that has to come into the picture, the new supply of Ethereum that has to come into the picture, it might come in very staggered stages. It's not going to be that Ethereum Foundation will release 100 million of Ethereum in the next 1 to 2 years. That's not going to happen. So again, there is super zero scope of Ethereum also getting minted. Okay. Now let's talk about an interesting coin. I think everyone knows this, right? Dogecoin. By the way, how many of you traded Dogecoin in your lifetime? And like not judging, but like okay, cool, yes. I think people
It was
like,
just for fun. It was just for fun.
Okay, super. Okay, so let's talk about the supply aspect of Dogecoin per se, right? And why Dogecoin, unfortunately, is a very bad currency to invest into if you are looking to invest in a longer term perspective. Okay. So what Dogecoin did was, when they released around 2015, they have already supplied around 100 billion tokens into the market already. Okay, imagine like the supply of Bitcoin is 21, Ethereum is still at 118 million, and there is around 100 billion tokens that came into the market for Doge, right? And then what happened with Doge is they did not stop there. Okay, so they kept pumping and pumping and pumping. They actually added 5% of tokens every year from there on. Okay, so in 2016 again 5 billion tokens, 2017 5 billion tokens, 2018 5 billion tokens. Okay, so if you keep on adding the tokens there, the lot number of tokens at this point of time, and imagine if there is no demand for that particular token. Imagine if there is no demand for the Doge, what is going to happen to the price of the token?
So the price will fall.
Simple, right? So it is so it's a bad currency. Simple, there you go. Like you read that, okay? So here, please understand, we are trying to introduce a couple of concepts here. We are trying to introduce what is the supply, what is the total supply of that particular token, how much is getting released, and how much of that is getting released over a period of time, right? We'll actually coin those terms in the next couple of slides, but I don't know who answered, but like yeah, the supply of the token, I mean the price of the token literally falls. Okay, so this is purely about the supply and demand of a crypto token, if you are evaluating a particular token. Okay, so let's do one thing. Okay, what I wanted to do is, I just don't want to talk about just this thing. Let's actually open this website called coingecko.com. Okay, so if you're in front of the website, I want you to start looking with us. Okay, CoinGecko is where you actually get the cryptocurrency prices by market cap. Okay. Throw some known names, guys. Which one should we look into first? Let's pick up something in the top 20.
I think Matic.
Soul maybe.
Soul, yeah.
Okay, let's do two things: Sol and Matic. Okay, I think we will introduce 2 to 3 different concepts here itself by looking at this particular chart. Okay, so what is the total supply of Solana here? Okay, so the total supply of Solana at any point of time is going to be close to 500 million tokens, right? So 508 million tokens is what Solana will be rolling out during their entire life cycle, okay, or like as a crypto token. And then there is a circulating supply. We'll come to that in a bit, but like for now, actually let me go to Polygon. Polygon makes more sense. Yeah, I think this is a better example. So there are 3 concepts here with regards to supply, guys. Okay, so one is the max supply, okay, total supply, and the circulating supply. So what is the max supply of Polygon? I think this is close to, is it 1 billion or 10 billion?
10 billion.
Yeah.
10 billion.
Yeah. So the total supply of Matic tokens in the market, that they have decided to release, at the time of defining the project is 10 billion. Okay. This is the max supply. Okay. So what is the total supply? So the total supply is, the supply that is already there in the market at this point of time. Okay. There is a subtle difference between a total supply and a circulating supply. We'll come to that in a bit. So what are we, figuring out from this? So all of the tokens from the Matic has been already released, has been already, in circulation in the market. Okay, so there are no other tokens that are left, to be released by Matic in the market. Make sense? Yes.
Yes.
Cool. Super. So there is this concept of circulating supply. Okay. So the circulating supply, obviously is less than whatever the 10 billion here. Okay, if you see that. So let's deep dive into the question mark here and then see what is where. So in a nutshell, what circulating supply means. Going back to our previous couple of minutes ago, we mentioned there is a utility for every token, right? So there is a utility for every currency in the Web2 world. Similarly, we need to create a utility for every token in the Web3 world. Okay. So here, if your token, in this case the Matic token, if it is getting used for specific utility, and if that utility is getting blocked, for doing those particular tasks out there, that is actually you divide the total supply, to the tokens that are locked in those particular activities, and then you get this concept of circulating supply. Okay. So here, let's actually deep dive, a little bit here. If you click on that question mark, so what they are saying is for network mining and seeding, they are saying they're actually locking around 302 million tokens, right? And then for vesting the contract, what they're saying is they're milling, they have locked in, certain amount of tokens there. For foundation contract, we have no idea what that is, but like, they are locking in a certain amount of tokens, right? So the circulating supply at this point of time is close to like what, 8 billion, in tokens. Okay. So this is the supply that is available for you to trade, okay, on the market here. Okay. So let's actually go through 2 to 3 more, for us to understand. So the total supply is here, here it did not define the max supply. So we cannot actually figure out what is the max supply for Solana at the moment. Again, circulating supply, okay. We don't have any specifics here. Okay. So let's pick up another 2 to 3 things. So let's go to Binance. Let's go to Polkadot. Let's see what Dogecoin has. Then let's see what Avalanche has. Okay, for us to get an understanding. So, any questions, guys? Matic fall? No, I don't know. By the way, guys, this is not a investment class. Okay, so this is only purely an education class. Okay, I think this is a good example again. Look at Avalanche. Okay, so what is the maximum supply of Avalanche? It's close to 720 million. Okay, and then what is the total supply out there? Total supply is the number of tokens that has been already released in the market by Avalanche. Okay, so the total supply is close to 408 million. Okay, so that means how much more yet to be released in the market? I think close to around 320, 316 million. 316 million of tokens of Avalanche are still yet to be released in the market. Guys, you're getting my point, right? And then what is the circulating supply? The circulating supply is around 284 million. Of course, if you go there, Avalanche uses staking, Avalanche has NFT projects, etc. There are like a bunch of stuff, the tokens are used for creating utility on Avalanche platform. So those tokens are locked there, and then that's why you see the circulating supplies 284. Okay, clear, guys? So let's quickly look into Binance. This is super interesting. You see here, Binance says, okay, this is USD, right? Okay. So that's why the max supply is infinity here, and the total supply and the circulating supply you see here, as different. So since it is tagged with the USD, obviously you can have infinite supply, which is again interesting concept there.
I think that answers your question. Chaitanya has asked a question about stable coins.
Yeah. Okay. So, yeah, Chaitanya, I think this is pure stable coin supply. Polkadot, I think they haven't given how much of the max supply that they have, but I think this is the total and the circulating supply. Okay, there you go, guys. This is what we've been saying, right? What did we discuss just a few minutes ago? The total supply of the Doge, they are just inflating and inflating and inflating. Okay, initially they released 100 billion, in tokens, and now they are saying they are not capping anything on the supply part. When they're saying the token is infinity. So obviously, what is going to happen? You can read yourself, right? So hopefully, I think you can actually read on a very scientific and an educated manner how the price of the token increases and how this connects to the tokenomics by going through this total max and circulating supply. Okay. Now let me introduce one more concept, and we will deep dive into those two use cases of gaming and DeFi. There are two concepts that we would like to introduce. So there is the concept of market value and the fully diluted valuation. Okay. So okay, this is the perfect example. So it's a simple equation, guys. So the market cap, I think they have given the equation there itself. So if you want to understand the market cap of any crypto coin or token, you pick up the current price. What is the current price of that particular token times the circulating supply. Whatever supply is there, that actually gives you the market cap of a particular token. Okay. And there is another concept called fully diluted valuation. So the fully diluted valuation is the present price of this token, which is 0.93 times the max supply. In this case, it is what 10 billion, right? So that will be the, so you see here 0.93 times 10 billion is what the fully diluted valuation, right? So this is the maximum this is sort of the market capitalization or the maximum value of a particular token. Okay, since the total supply and max supply are one and same for Matic, you can say that, okay, hey, the fully diluted valuation is already in books, for Matic as a currency. Okay, so this is important. The reason is, let's introduce one more concept here. I think we spoke about avalanche, right? Let's actually pick up avalanche. Okay, so here, if you see, guys, so what is the market cap? Market cap is this price, 24.32 times the circulating supply. And then fully diluted valuation is 24.32 times, the max supply here. Okay, so that is going to be the fully diluted valuation. Okay, now here is what I want you, guys, to pay a little bit of attention and then closely observe. Okay, so we are saying the fully diluted valuation of Avalanche is going to be whatever this price. Okay, but still there are 300 close to 316 billion tokens yet to be released in the market. Okay, let's actually do a quick math here. So what is the total supply to the max supply? Okay, this is close to, let's do a quick math. So 408 divided by 7. Sorry guys.
हेलो हाँ जी भाई हाँ मेरी क्लास चल रही है
So around close to 50%, 56% of the tokens of Avalanche are in circulation. Okay. Now, okay, I think I'm confusing you a little bit and making it complicated. Let me take a step back. I want you to, I want to kind of demystify this in a layman terms. Okay, let's actually do this, right? So the market cap as of now is whatever 6916. The fully diluted valuation is 17550. Okay. So the Avalanche, has to grow, from 6916 to 17515. Guys, are you able to understand? So what I'm trying to say there is, Avalanche is at the level A here. Okay. They have to come to level B here. Okay, so this is the journey Avalanche has to make to justify this particular valuation. Okay, and in this whole process, they will be releasing, these 316 billion tokens over a period of time, to reach this particular stage. Okay, this is called emission schedule. Okay, when Avalanche is going to launch their next set of tokens, to reach this particular stage, is one concept. There is emission schedule, which is the number of tokens that is getting released. The second concept is, for Avalanche to reach to this stage, there has to be, lot of progress that needs to happen on the Avalanche platform. Okay, that means there has to be a lot of projects that needs to be launched. There needs to be a lot of utility value for Avalanche that needs to be logged into multiple protocols. Sorry, not protocols, multiple projects. Whether it is in the DeFi space, NFT space, or whatever, gaming space, you name it, or whatever you call it, there's different use cases that are there in the Avalanche there, right? So what I'm trying to, explain here is, there are two things, Avalanche has to do at this point of time. They have to release the tokens, in a very cautious and judicious manner. For them to sustain the value of the token. That's number one. Number two is also at the same time, Avalanche has to increase the value of the project, has to increase the utility value of the project to justify, whatever the fully diluted valuation, that they have at this point of time. Kind of makes sense. Let me take a pause. Yes, do you like to chime in anything?
Yeah, definitely. You talked about emission, and I think maybe you were going to bring it up, but also about vesting. So another key concept here is vesting. When there's a new or like kind of a relatively new project, there's a lot of tokens that are locked up. So as you can see here in the total supply, there's a difference between total and circulating supply. Some of the tokens are staked, some of the tokens are locked up in vesting basically. So vesting is not a concept that only works in Web3. Even in our normal world, at tech companies and at startups, when you get hired, uh, the companies offer you like a stock bonus. But what the company does is it doesn't let you sell the stock right away. It is yours, but it is locked up for 3 years. And then every year they give you like 10, 20%. And then after those 3 years, you get 100% access to all those stocks. So then that's the same with tokens. So whenever there are early investors like venture capitalists and other angel investors in any crypto project, they have a vesting schedule. So when they want to they basically get access to these tokens at a cheaper price, but they are not unlocked right away. So what happens is, if that's unlocked right away, what happens is the price falls. There's a huge supply incoming, and they obviously want these investors and their incentives to be aligned with the projects. What happens is, if let's say if I give you a 1,000 Matic token and tell you that you have to like you get access to all of it after 5 years, every year you get a little bit. So it is in your interest that my project succeeds, so that after that 5 years, you also get a big return on your initial investment. So this is how you incentivize your investors to align, so that they don't drop all your token at once, so that your price doesn't drop. So that's one of the key things in tokenomics as well. So that's what you have to watch out for, the vesting schedule. So sometimes when the token is new, they will have a huge cliff of a vesting schedule. So what happens is there'll be a huge inflow of a lot of tokens at once, when all these tokens are getting unlocked. So if that's going to happen, you can expect a price to go down, because obviously now the demand hasn't gone up significantly, but the supply increased overnight. So, but if a project, let's say, has gone through the vesting schedule where most of the initial investors have already had their tokens unlocked, then that means that then there's not going to be a huge chunk of supply coming in at a later or a future point. So yeah, I don't know, Kiran, if you're going to cover that later on.
That's a great point, guys. So yeah, the token price, I think let's summarize, for now, right? We spoke about the supply and demand, we spoke about inflation and deflation. We spoke about different sort of supply that you can read through, in a specific token. And Ash introduced these two new concepts of cliff and vesting, right? So cliff is, as Yash mentioned, the number of months, a specific project, the token has to be locked in. Okay, I think I'll take a simple use case, for 2 minutes. Imagine you're a Web3 founder. Okay, and then you are doing a private sale, especially in the initial sale, right? Could be a pre-seed round, but it is super private sale. Okay, now I'm an investor and Ash is an investor. We both are coming and we are saying that, okay, hey guys, we are super interested in your project. We are super interested in your team. So let's actually, let me buy, let each one of us buy like 1 million worth of tokens. Okay. But what is the price? The price is 0.0003 or whatever. Okay. So it's kind of not even 3 cents, but like, less than a cent. Okay. And now 12 months down the lane, you take the money. We each invest 1 million. We each invest like purchase like 1 million tokens. You as a Web3 founder, you take that particular money. You build the team. You build a super awesome product, and then you do further rounds of sale, and then eventually you decide that, okay, hey, now this is the time for me 12 months down the line for me to go public, right? Public is getting onto a crypto exchange, whether it is Binance or Coinbase or different exchange platforms that are out there. Okay. Now, say let's also for the simplicity of the example here, there is total only 10 million worth of tokens that you have created, okay, for your particular project. and 2 million are already locked with us. Okay, so one each with me and Yash. So there are 8 million tokens, and then you decided that okay, hey, I'm going to release say 7 million tokens when I'm going public. Okay, guys. Now, so 12 months down the lane, when you are going public, we purchased the token at 0.003 or whatever, right? Imagine if the token opens at 50 cents, okay, on the market, and then say the 50 cents actually becomes $1, and eventually say the token price of yours becomes $2. Okay, so we as an investor, or like forget about investor, right? If we as humans, right, what will we do in that particular instance? Okay, when we are holding 1 million each tokens, and then if the price goes from 0.0003 to $2, what is the first thing that comes to our mind? Sell.
I'm going to sell and make a profit.
Literally sell, right? Sell, retire, water, buy a yacht, and live happily thereafter. Okay, it's as simple as that. Okay, but say imagine you have already you are putting in 7 million onto the market, and then say if we put in a sell price of 2 million tokens at $2, what is going to happen for the price of the token? It will literally fall. Okay, so what is happening in the crypto world is nothing but this, right? You hear the term rug pulls, scams, etc. They are actually pumping. I mean, like rug pull is not similar to what we are discussing, but like rug pulls are nothing but like people are pumping in the price and then they're dumping all of a sudden. Okay, so in order to protect the fall in the price of a particular project, whenever you are investing, there is a concept of cliff investing that comes into picture. Now, you as a Web3 founder will come to us and then you will say, okay, guys, thank you for participating, and taking that 1 million tokens. No, we don't want you to sell, 12 months down the line whenever we are going public. Okay, rather, we want to lock in your tokens for another 6 months, after we go public. Okay, and then after 6 months, you can actually sell the tokens, a certain amount of tokens, every 3 months, thereafter, for a period of 2 years or 3 years. Okay, so imagine if you're saying that okay, you can sell only 10% of the tokens every 3 months. Okay, so that means it will take kind of close to what 30 months for us to completely sell our tokens, sell your tokens in the market. Okay, so in the whole process, what you are doing as a Web3 founder is you are actually protecting the interest of your company. Even though we as an investor might invest in you, even though we would like your company to grow, but if we see the value of 2 and 2.5 on the screen, there is always this intention of hitting that sell button. If we don't have these concepts of cliff investing, right? So that's why the concept of cliff investing came into picture, and to protect the fall of the token and to ensure that the token sanctity is maintained, at the end of the day, rather than getting seen this as a pump and dump scheme by the other investors.
Yeah, and just one thing to add in that scenario. So when they take that extra time for the lock-in period, the team is hoping that within that time, they will create enough demand for the token that when you insert these new token into the supply, it will be able to absorb it and it will not affect the price by that much. So it kind of gives the team time to create that demand.
Demand,
Yeah,
and I would also add the utility value. You need to increase the utility of the particular token, right? So the way how people are increasing the utility of these tokens, especially Avalanche and Solana, is they're asking, okay, hey, no, please come and build projects on top of our protocols, right? Whether it is DeFi, NFT, gaming, please come and build projects, bring in more value, onto the protocol. That's how you grow, and eventually the protocol value grows, and eventually the value of my token price grows, right? So these are all the correlations there. Guys, we'll take small moment and then see if you have any questions so far. Are we going too fast, or were you able to catch up, understand? You can take one or two questions, feel free to unmute yourself and ask questions. Okay. And if you're super clear or confused, you're not. Okay. Okay. Let's do one thing. I think Yash will talk about the tokenomics of a gaming project. And then we will touch on the DeFi project.
Yeah,
Yes,
just
go ahead.
before we move on, Kiran, sorry, I just wanted to say this. So, as we were talking about Bitcoin and Ethereum in the beginning, the thing that separates most of all the other products from Bitcoin and Ethereum is that they don't have a vesting schedule. All of their tokens are already vested. They do have an emission, meaning that whenever you mine a block, there's going to be new Bitcoin created. But it is very predictable that every block is only going to give you this much Bitcoin, and the last Bitcoin is going to be mined in 2140. So which is why like Bitcoin is called, like we call it as sound money, because it has a fixed supply, a fixed emission schedule. This is how many Bitcoins are going to be released every block, every day, every minute, and it is very predictable. Same goes with Ethereum. There is not a vesting schedule, and though there is no hard cap on the supply, but they've implemented a burning mechanism through which the more the blockchain is used, the more of ETH is burned. So after like ETH is now going through something called as an Ethereum merge, wherein they are going to go to proof of stake, and now the emission of ETH is going to be reduced by 85%. So let's say, for example, right now, for every block that is mined, there is 2 Ethereum that is being supplied, that is being created. And after this, when they move to proof of stake, it is going to be an 85% drop in that number. So eventually what that does is there are some reports that says ETH might become deflationary. So like how we saw, like, right now there's 118 million supply, that supply can actually go down. So if there is enough usage of the blockchain, more ETH is going to be burned than being created. So, there are these kind of novel technologies that you can use to eventually control your supply with a free market. Like Bitcoin has a fixed supply, but Ethereum is like free market. If there is more usage, it'll get burned, and the supply will go down. And if there is less usage, the supply might increase, and there's that. It's kind of like a free market. So just wanted to add that. And yeah, now we can move on to gaming. I think somebody asked what are the factors to fix the initial price of a token. Kiran, do you want to take that?
What are the factors to fix an initial price? That's to be frank, a very tricky question. So I think rather than fixing the price, right? It could be more on the design part. So might be, let me take this quick screen here. So this is what I wanted to talk about. This is the curve finance token distribution of the initial supply. So if you see the supply of this, so they wanted to create a certain, okay, there are 2 to 3 things, guys, that I have to talk here. So the first things first is you need to decide on what is the supply that you wanted to create in the market, okay, and why and how you are arriving at that particular number. Okay, that's number one. And the number 2 point is what is the utility value that you wanted to create for that particular token. Like, first of all, like, don't create a token just for the sake of creating a token. Don't create a token just for the sake of that you want to put it on the market and make money, right? There has to be utility, underlying utility for that particular token, or for the particular project. So first of all, define that, that is very, very important. And then how are you connecting, your supply, to that of the, utility that is being generated on a consistent basis, right? So that is what, Convex did. We'll talk about that in a bit, but on a higher level note. So if you see the token distribution initially, what they initially did was, so the investors have only 3.3% of the tokens allocated. The treasury has 10%, the team has 10%. And if you see the most of the the supply of the particular tokens has been allocated to the guys who are actually using Convex, right? So they are creating, the more the more people use convicts, the more people get the tokens, and the more tokens they lock in into the ecosystem, the more rewards they get, and the more rewards they get, the more value. The more tokens they lock in, the value of the protocol increases. At the same time, the users also will get like a lot of rewards there, through APYs, etc., and all that. I know I'm not giving you a direct answer to you there, but rather than identifying what is the price of the token that you can arrive at initially, think through these terms, right? So what is going to be your, what does the token exactly do, and how can you define the supply? What are you going to do with that, supply? How are you allocating to different stakeholders? Who are different stakeholders for your particular project? So if you can define that, I think that is going to be more tougher job, rather than saying, okay, hey, I'm going to launch this, do the private sale at might be 10 cents or 5 cents, right? We'll come to that. We can discuss that in another session. It requires a little bit of math, engineering, and computer science, in the back end. But from a overall strategic point of view, think through these, areas if you are designing, if you are like, launching the token.
Yeah, so just something to add to that. So like valuing your token actually exists in the real market, in the other world as well, like before Web3. So when there is a startup that comes up, when they are doing some kind of raising, some kind of fundraising, so they have to kind of value themselves, and they will sell a few of their shares, let's say 10% to an investor. So they try to come to a value, okay, what is the value of these 10% of our shares? So I mean, there's ways of doing it in the normal financial world as well. There's something called as I don't want to go into the details because that will derail us. But it is kind of like a comparable company analysis, and basically you compare yourselves to other projects that are doing similar stuff. You compare to what utility you are creating, and then you value yourselves. Okay, let's say if we are solving a problem that is probably, let's say the next. Let's say the next YouTube or something, and you think that is going to attract hundreds of billions of dollars. So you think, okay, we are really solving a big problem here and all of that. So in that case, you can start with a higher valuation that, okay, each token will be this much price and this is our market cap that we think we are valued at. But you still have to choose that very carefully, because if you set a price very high, nobody would want to probably buy your token, and that would just be a failed launch. But this also happens in the normal world when there's an IPO happening with a stock. They get these fancy investment bankers who do all this analysis and come to a price saying that, okay, this is how much your each share should be valued at, and this is what you should go public with. Sometimes they are right, sometimes they're wrong. When they're wrong, the IPO, even right at the IPO, you will see the price of a stock will go down by 25%, 50%. So, it's just a very complex. Kiran, we can see your screen. Yeah. So you're on mute, Kiran. You're on mute.
No, go ahead. Sorry about that.
Yeah, no problem. Yeah, so that's what I was saying. Just like it's kind of similar to an IPO. It's kind of like you have to figure out what is the best price that people will still buy your token at, and something that makes sense. I hope that answered your question. I'm just going to move on to tokenomics in gaming. So we'll start with this. Why do we need tokens in gaming? First of all, like what are blockchain-based games, and why do we need tokens, and like how does it work? So let's go with first what blockchain games are. So the purpose of creating a blockchain game is where all the assets in game are tokenized and they exist on a blockchain. So the reason why we would do that is, uh, let's say you play some kind of a game. I don't know if you guys are familiar with World of Warcraft or Dota. These are like very famous traditional games. So within that game, there are a lot of assets. Like you have your swords, you have your own gear. Every you can change the characteristics of your player over time. So these are basically considered as in-game assets. So which you can earn or buy over time. Like once you play the game, you earn like higher level of characteristics that are unlocked and that kind of stuff. Also with like gaming, like sorry, sports games, something like FIFA, that's a football game. They have like FUT cards that you unlock and earn over time. These are all in-game assets. So any game that you can think of has some kind of in-game assets to an extent. But the problem with the current world of gaming is that these assets are basically locked inside the game, and you don't really have access to those assets. It's kind of like a walled garden, if you can imagine. So it's kind of like you earn anything in the game, it only exists in the game. You can never sell it to someone else. Even if you can, it's usually only for in-game currency. You can never take anything out of the game. You can never take your assets to another game. You can never sell it for real world money and do anything out of it. So the point of introducing blockchain with games is that any asset that you've earned or that you've earned basically by spending time on in a game, you can carry that asset to another game. Let's say, for example, you can either sell it for real world money. You can do anything with it. It's basically you own it. Currently, in our current blockchain game or in our current normal games, is you don't own the assets. It's like the game is letting you use those assets. Tomorrow, if let's say the company decides to choose to take them away or revoke your account, it is all up to the game producers. You don't have any control over assets. You cannot move them. You cannot trade them. They just don't belong to you. You're kind of just borrowing it from them in a scenario. So I just want to stop there, if that makes sense, that why do we need tokens and why do we need blockchain games and what is the use of tokenomics in games? Kiran, if you'd like to add anything here.
Great. Good context there. Yes. Again, sorry. I always go back to the Web2 sort of stuff, right? So guys, imagine, say, if you're playing a cricket game, right? So in the real world. So for you to play a cricket game, there are a bunch of stuff that is required. There is a bat, ball, there is gates, there is a, whatever. Sorry for my bad cricket, stuff. But like there's a helmet and cards, whatever stuff, that is required, right? So these are all primarily assets that you are purchasing to play a game, right? So imagine, say, if you decided to upgrade your assets, okay? That means you wanted to get a new bat, etc. Or if you decided that, okay, hey, let me take a break from this game. Might be my exams are coming for the next 6 months, and I might not be able to play my game, right? So what happens in the real world, right? You go to your friend and then say, okay, hey, you know what? I would like to trade this, sell this, or whatever. Would you like to purchase it, right? And that happens in the real world. You can easily sell it. You can easily make money. Literally one way, right? You can actually create a utility for that particular asset. You are creating a utility for that asset, and you are actually trading and making money there. Okay, so that's what happens in Web2. So now coming mapping that to what I said, to the Web3 world and the so-called esports, etc., and all that stuff, right? So I'm sure most of you guys might have played PUBG or heard of PUBG, or like for that sake, let me take this quick example of Ludo, right? I'm sure like everyone might have played Ludo during COVID times. Okay, so in the Ludo, just for the sake of using it, right? So the dice that you use in Ludo, okay, doesn't belong to you. Even though, first of all, of course, the Ludo game is free, but like if you're paying money for the Ludo game, the dice that you're using in the Ludo game belongs to the Ludo game itself, not to you, right? Similarly, I don't know how many of you might have played Farmville, which is like decades long ago, game. There in the Farmville, you buy different set of equipment, to make your farm look attractive. You purchase different set of stuff, to create a mill, to create a house, to create that whole economy there, right? People do pay for those assets, people do real currency and then buy that stuff, okay? But at the end of the day, who actually owns it? It's the Facebook or the game creator who owns that, okay? Not you, right? That is a clear distinction factor. In the traditional world, you can go and exchange a bat, where you have put in the money and you are getting the money back. But whereas, when you are purchasing online, even though that asset is yours, you're not able to trade it, right? You're not able to get your money back, which is super unfair, right? So that is where the whole concept of blockchain came into picture. The token, stuff came into picture. So what blockchain games are, trying to, create is, say, imagine if, you purchase a Porsche, if you purchase a Ferrari, if you purchase a Sword, or if you purchase an armor in a particular game, those are called skins and assets, right? You should be able to trade, those assets, within the game or outside the game. Outside the game is a long distant dream for now. People are still working, but you should be able to trade that, to some other individual. Okay, say Yash and I are playing. Say, imagine I have a Ferrari, Yash has a Porsche, and then I move on to the next level, and then say, yes, you know what? I think I don't need Ferrari. I might need Porsche, to kind of play this particular level. Can we actually trade, right? Can you give me your Porsche and I will give you my Ferrari, right? So in one way, what we are trying to do is, whatever money I'm paying for Ferrari, I'm actually transferring to Yash, and whatever money Yash paid for Porsche in the game is giving it to me, right? Through assets, right? So that asset transfer is happening between us. That is what is happening in the blockchain game. I'll not take much of the time. I hope you were able to draw some analogies from this.
Yeah, no, I think that was spot on. And if you guys have any questions, just shoot them in the chat. So I'm going to move on with our example here. It's Axie Infinity, which is the most famous blockchain game that came around 2020, 2021. So, this was the one that drew attention even from mainstream media and mainstream game players. Currently, it has the highest total value locked. So I'll tell you what that means. It means that all the in-game assets, so like we talked, all these skins and let's say Porsche, Ferrari, whatever asset is on this game, if you today add up all the value of all those assets in dollar terms, what are the dollar value of all those assets? It is currently the highest in any blockchain game. It also has the second highest monthly active users. So it tells you like this is the most important game, or like the most famous one at this point. And one of the tokens within the game, which is the AXS token, we'll talk about that. It is the highest. It has the highest market cap for any game token. So let me just first start off by explaining what the game is, and then we can move on to what the tokenomics and tokens are within the game. So just like overview of the game is that it's a Pokemon styled game. If any of you have ever played the Pokemon game on the Game Boy, where like all these Pokemons fight with each other, and they all they all have some characteristics, some benefits, some pros, some cons. The water Pokemon is useful on the fire Pokemon, but it is weak against the electric Pokemon, something like that. So there are these Pokemon type characters, which are called Axies. So these are all like individual characters within the game, and which is actually the first token, the first asset within the game. So each Axie, each character is an NFT, which means it's a non-fungible token, which means it is unique. Every character is unique. It has its own characteristics. It has a stats. It is strong in something, weak in something, and all of them are just unique. No two characters are the same, even though if they look alike, there are probably very minute differences within the statistics that they have. So they're all NFTs. They cannot be interchanged with each other. And currently within the game, they have an unlimited supply, which means that these characters are just, you can actually breed them. So what happens is if you have two characters, you can make them mate just like a real pet. You can make them mate, and there's a new Axie that is created, which creates a new NFT. So technically, theoretically, there is a unlimited supply of these Axies. What it does is that, but I say theoretical because there's a price to mate them, and eventually it just becomes too expensive to keep mating them. But that's just go into details. But so first part, this is a game about Axies, and just like Axies the main game of the game is around axes, and what you have to do is battle these axes. So just like Pokemon, you have to make your axes fight, and that is the basis of the game. So just like I've mentioned here, you need these axes to start the game. You have to buy these NFTs which are like unique, and you have to buy them to start battling and start playing the game. Um, the second most important token in this ecosystem is the SLP token, which is called the Smooth Love Potion, which stands like it's SLP. So this is not an NFT; it's a fungible token. So fungible token means any other, like Ethereum, Bitcoin, AVAX, Solana. All these tokens are fungible, meaning that you cannot differentiate one Ethereum with another Ethereum. It's not like I give you one Ethereum, you're like, no, ye wala nahi, mujhe wo wala do. It's all one and the same. It's like even a normal currency, like 120 rupee note is the same as another 20 rupee note. They're all fungible and interchangeable and have the same value and have no distinguished characteristics. So just like that, SLP is a fungible token. It also has an unlimited supply. Uh, how you can earn SLP is that when you battle axes, so as I told you, the game is about battling. So when two axes fight, whoever is the winner, they get new SLP. So this SLP is actually produced newly. Which is why there is no supply cap. Okay, only this many this many SLP will be produced. The more you keep fighting, the more SLP will be produced and will be given to you. We will see how this impacts the price of SLP over time, because having an unlimited supply is always a tricky thing. If there is not enough demand for your token and you have an unlimited supply, it will cause problems and cause for the price to fall over time. So as I mentioned, you can earn this within the game. So what is the point of this token? Why have they created this token? The point of the token is it is utilized for breeding. So as I mentioned earlier, you can breed two axes and create a new one. So in order to do that, you have to pay a certain amount of SLP. And this SLP is burned. So which is why I put an asterisk next to unlimited supply. So just like Ethereum, here the supply is not capped, but as long as you keep breeding, the SLP keeps burning, so that eventually there's a balance between how much SLP is manufactured and how much is burned, depending on when you keep breeding your axes. So even within breeding, so the way to control the initial axes and to control that supply, what they've done is that they have a they have a they have a table which says if you're breeding the axis for the first time, let's say for example, the cost of breeding it for the first time is 100 SLP. But when you come for the second time to breed the same axis, it will be more expensive. It will be like 300, and then it will be like 500, and then 1,000. So eventually, by the time you can only breed an axis for 7 times. By the time you reach the 5th or 6th time, it just becomes very expensive to breed that. Eventually, what people do is just go and buy a new axis. So this is how they try to limit the supply of axes, because they wouldn't want people to just keep breeding and making new ones. They want to limit it so that eventually you go and buy some instead of just keep breeding. So I'm just going to take a little bit of a break here. Kiran, if you want to add anything, and I can just move on.
No, this is great. We have a question. So Krishna is asking, if people play the game but don't breed, then the supply becomes finite.
But the incentive for me as a gamer, it is that I can breed and sell my axis. So I will never not breed it. As long as it is profitable for me to spend this much SLP and breed a new axis, I will keep doing it. Because if there are people out there that are buying axis and I can make a new one, so I will make a new one and make profit. Does that answer your question, Krishna? Okay, thank you. Okay. Okay, so moving on to the third key token, which is it's the same slide. Yeah. So moving on to another key token within this ecosystem is the AXS token. So the AXS token is also a fungible token, which means that it is the same token. It has It doesn't have any distinctive characteristic. It is just like Ethereum. It is just like a 20 rupee note. You cannot distinguish between two AXS. So it is also a fungible token. This token has a limited supply of 270 million. So what this tells you is that, this token is more um, like it has a different purpose within the game. It is not, you cannot earn this token within the game. It is just, it is just something that you need for breeding. So for breeding, you need SLP and AXS. So you need one AXS and a certain amount of SLP. And this token is also used for governance. So every fungible token out there has, there are only two major types of them. One is utility, which means you can use it for something. Here for SLP, you can use it for mating your axes and creating new ones. And for AXS, it has a utility, plus it is governance. So what you mean by governance is that you get to vote on what happens within the game. So this is what is unique. This is what is unique with Web3 in general, where they have created these tokens, which if you own these governance tokens, you get a vote. It is kind of like democracy, where you get a vote into saying what happens to the game, how you want it to develop, what changes you want to implement in the game. So most of DeFi tokens are usually governance tokens that gives you a power to decide what happens within the protocol, what happens within the game. So this is kind of just like democratizing the power. So comparing this to the Web2 world, when there is a game, let's say you're playing World of Warcraft, you're playing any cricket game, you never get to decide what happens within the game. You cannot tell that, okay, there is a public demand key, add Dhoni to the game. If Dhoni is not in the game, something like that, some kind of feature that is missing from the game and you think it should be there, you cannot do anything about it. The game is there, it's up to the game makers to decide what goes in the game. So this is what unique with Web3, that we as the users get to decide what actually happens, because we are the biggest contributor to the game. So that is the AXS token. And as I mentioned earlier, the market cap of this token is what matters. This is the actual game token, and this has the highest market cap for any other game token. So which tells you that how popular this game is and what is the demand to control the governance of this game. And the last but not the least, this is the most newly introduced token within this ecosystem. This did not exist earlier. Like when the game came out, they did not have these, but they started something called as land. So land NFTs. So land is also an NFT, just like Axie. They all have different characteristics. They are not interchangeable. Which is why the price of each land will matter depending on what is the characteristic of that land. It also has a limited supply, meaning that there are only a finite number of land. So what is the point of this land? The land is basically where the entire metaverse of this ecosystem of this game is. So all the fights, everything within the game happens on this land. So if you own a piece of land, you can earn rent in some way. You can earn your potential revenue through resources. So if you own a land, just like real world land, some land has oil, some land has minerals, that kind of stuff. So these are all, some land will be rich in some kind of in-game assets, which will be useful to you. So the reason why you would purchase a land is you are hoping that eventually the price of it will go up, just like real land. You're buying it because it has some kind of, it gives you a potential revenue through some kind of resources within that land. So yeah, like this is the newest edition. This can also be compared, like in most of the metaverse projects today, they are also selling a piece of land, and which is very similar to now it's coming to all the gaming platforms as well, where they're selling these. So any question on all four of these important tokens?
Cool, super. What I would like to add, might be what Ash mentioned, right? So they haven't created tokens for the sake of creating it, right? So every token has some sort of a utility. Every token has some sort of a supply, and how the gamer within the Axie Infinity can use the token. So like that's the kind of the beauty, you know, that's the core proposition that, you know, you guys should understand, you know. So if we're going and working in a gaming project, you know, apart from building a beautiful game, the tokenomics within a game is going to be super important. And in fact, tokenomics is very important, especially in two areas. One is in the DeFi area, and another one is in the gaming area. And if we have to rate, I think, you know, the gaming actually is, you know, the most important. You know, both are equally important, but you know, gaming takes a lot of priority. You know, when you look into the tokenomics, you know, and I know we ran out of time. Yeah, go ahead.
Yeah, so I just wanted to say, like, this was just an example of Axie, but any blockchain game that you pick up will use a combination of these NFTs and fungible tokens like ERC20s, and they will just create, like, experiment with different kinds of tokenomics, which will incentivize a user to do some kind of an action. So over time, the value of these assets can go up and people keep playing these games. So they could be different, like they're implementing a different, they're experimenting with a different kind of supply, a different kind of utility, but eventually it'll just be a combination of these NFTs and fungible tokens in some or the other manner. I'll just quickly wrap up saying, to conclude, Axie was actually one of the biggest blockchain games, but the only reason why it couldn't break into mainstream and it did not achieve its potential is one of the important key factors was that all these games have become play to earn, but it's becoming more important to understand that these games need to be play and play and earn, which means that you have to create a game that creates a demand in itself, and earning is just a side hustle. You know, that's an additional bonus on top of what's happening in the game. You know, like all these traditional games, even though they don't pay you money, people are willing to spend so many hours on it, which is what needs to happen within blockchain games as well, where the game itself is so good that people will play it. And if they're getting money out of it, it's an additional bonus. But what happened with Axie Infinity and most blockchain games today is that they're only being played for money. So what happens is eventually the demand runs out. So as I explained with Axie and SLP and all that, SLP, since it has an unlimited supply, the only way to control it is by burning it. And it only gets burned when you breed Axies. And why would you breed Axies is when there's a demand for new Axies. And that new demand comes from new players. So what has happened in this game is that the inflow of new players has gone down drastically, which is why now there is not a big demand to breed Axies, which is why not a lot of SLP is getting burned. So what's happening is SLP is constantly getting increasing in supply, and on the other hand, the demand basically the burning has gone down by a lot, which is why the SLP price has really tanked over the last 2 years. So yeah, this is where like most now games are trying to focus on building a game which has an actual demand from players outside of just giving money. So that's all that I wanted to say.
Awesome, guys. You know, I know we ran out of time. You know, do you guys have like 2 minutes? I won't go too deep into this particular gaming. I mean, sorry, the DeFi project. But like, let me give you a very high level overview. And if you have any questions, you know, we can actually chat in our Discord, you know, or you can pick me or Yash into the part of time. So I'll take only 2 more minutes, you know. So especially, I think as we said before, right? So how do you ensure, how do you create the utility value of a particular token? And say suppose if someone is purchasing your token, right? You know, you should not, you know, you should give an incentive for them not to sell your token, you know. And you should never be in a situation that, you know, you are creating a situation for them to sell the tokens, you know, because of the poor project, or you know, they don't find utility in that particular project per se, right? So one of the beautiful example, you know, on how this has been done is by Curve Finance. So actually Convex, you know, Convex is built on top of the Curve. Okay, I'm not going to deeper into what, you know, Curve is all about, but So Curve is a DeFi protocol. What you can do is you can actually stake your money and then you can earn like higher yield. Okay, and Convex is actually built on top of the Curve. And what they have done is, okay, you as an investor can come and actually earn more higher yield on the Curve platform. But rather than you going and doing the staking on different sort of and using different sort of techniques or strategies there, we will try to help you in an automatic manner, right? So that's what actually Convex has done. So the way how they have designed the supply, I think we seen this slide before. So they've given most of the supply to the people who have been using the Convex as a platform, right? So primarily the flow how it is people will actually bring in the liquidity. People will be getting the CRB tokens. They will be bringing the CRB tokens. I think let me show you this slide. I think this is better. Okay. So what people what they have what Convex has done is you bring in the money. We will use the strategies of Curve and then we will get you the money on an automated basis. And in the whole process, what Convex has done is they have rolled out their own token. Okay. And now you need to create a utility for that particular token, right? For someone to actually hold that token. That means you need to create a demand for that. So now what they have done is, so if you see here, they're saying, okay, now if you hold a CBX token, you lock in that particular token, for about whatever certain period of time, and you make money on top of it. Okay. So what they're saying is, I'm giving you the token, but like you don't sell the token, right? Give the token back to me. And then in the whole process, we lock in the token for a certain period of time. Going back to our previous example of vesting and cliffing, right? So this is something on the similar lines these guys have done, right? Lock in your token and for a certain period of time. And what they're saying is, for you, to do that, we will actually pay you more money, right? We'll give you more returns. So that is one smart way of actually locking your own tokens on your own platform rather than letting people sell. That's one. And what they have also done is what they have also done is so you can actually make money on the Convex as a platform by putting that the token on the platform. What you can also do is you can actually rent your Convex token and you can actually give your token to other platforms. You can actually kind of lend it. By lending the same token to different set of platforms, you can make money from that angle as well. Okay. So in a nutshell, there is a business angle to why people should come onto the Convex. Okay. On the top of it, they have created a token, and what they have told us, you lock in your tokens, you make money. You can actually lend your tokens and you can make money. And if you lock in for a certain period of time, you can actually make money, right? So they've created certain set of lock-in strategies for someone to lock in that token rather than putting it to the market and selling it to the market. And the interesting part that needs to be noted here with regards to the Convex is their supply of tokens is proportional to the amount of the Curve thing that is coming up. Like so for example, if there are like 10 million liquidity that is coming onto the platform, there is an equivalent amount of tokens only that is been circulated. Okay. So they never created an inflation and deflation. Okay, so they kind of created a money to one thing in the market, in their whole ecosystem. It's a kind of a very beautiful design that they were able to do. Okay, as I said, you can actually delegate, and make money there. So primarily, just to summarize, I'm happy to deep dive a lot further in our Discord channel or ping me, directly. But what I was trying to say there is, if you're designing a token for your project, you need to think through what is the supply. In this case, Convex has a very fixed supply. As I said, the supply is proportional to the amount of liquidity that is being, coming into the ecosystem. Okay, that's one. And most of the tokens are in, circulation, right? As I said, these tokens are getting, used for giving more rewards, and these tokens are, used for delegation purposes to other protocols, etc. and all. So those tokens are not sitting idle, and they're actually rotating those tokens and creating value out of those particular tokens. Okay, and what is it for the users? For the users, what they're saying is, we will give you the fees, we'll give you rewards, for holding this particular tokens. So they're actually kind of locking in. They're saying, okay, hey, you don't have a reason to sell it. When you are getting 5%, 10% return on my platform for just holding my token, why should you just go and sell? You won't get that return, right? And in the whole process, the price of the token also will go up. So these are like multiple models that they have implemented, and it's such a beautiful model. You should go and read their paper and do research more about this particular platform, Convex. But this is such a beautiful model that they have created. Okay, as I said, in the best interest of the time, let me stop here. Happy to take any questions, guys, and we will take it from there. Guys, we'll take 2 to 3 questions.
I just posted an article about what Kiran is talking about. So whenever you guys get a chance, take a look at that.
Sure. Yeah, now feel free to unmute and ask your questions. Okay, we'll wait. If you want to type in, feel free to type in. Okay, it seems like either we made your life so easy explaining these concepts or complicated you. Yeah, if you have first of all, thanks a lot for joining. I think we ran this session for almost close to 2 hours now. Thanks for your cooperation, support, and patiently listening to us. Yeah, feel free to join our Discord Web3 Learn, and give a follow for Yash. He has put in his LinkedIn link there. How will you help more women understand this? Is only meant here right now. Lisa, to be frank, I think I would say okay. No, tokenomics is, I think, let me not make this comment, right? But I think women understand, finance and economics better than men. Let me put it that way, right? It's our moms who actually run the finances of the household. It's the women who run the household. In fact, so I think you guys should understand a lot more about tokenomics. It's like, I don't know if you're there for the first 15 to 20 minutes, right? We were drawing literally parallels from the Web 2 world to the Web 3 world. So happy to, as I said, feel free to put in your questions in our Discord, and I'm happy to take up any time. Happy to do one-on-one sessions as well, if you need more help. Cool.
I think, it's not about just understanding. I think they are definitely understand it better than us, but it's only about attracting them to this industry and helping them believe that this is also an equal industry for them. There's actually a lot of Web3 projects out there that are trying to promote more women within this space, because we don't want what happened with Web2, where most of the software engineers that you see today are men, which is not to say that women don't know how to code. It's only about there are no role models for them to follow. There is no support for them to get to that stage, which is why I think they're trying to fix that within the Web3 space. There's a lot of NFT projects. One that comes to mind is it's called World of Women, WOW. It's WOW. That's what it's called. It has its own Discord. I'll try to see if I can find it. But they're trying to onboard more women in the space. And yeah, I think it's just about just opening the doors and then making affirmative action to actually promote them to come to this space is all it needs.
Cool. Thanks, guys. And on that note, thank you so much. We'll keep doing the sessions, and as I said, we'll share the PPT and the recording in the next 48 hours on your emails. Thanks again, and have a great evening, or have a good day wherever you are joining from, and have a good weekend as well. Stay safe, take care. Thank you. Bye bye.